as Flamur mentioned, my name is Rob Smith. Legally, you saw the M. Rob Smith, Martin Smith, but I go by Rob. Rob's my middle name. Been going for Rob ever since I was a young kid, and if anyone calls me Martin, I think it's either the feds or HR. So either or is good with me. Like I said, all my friends and everyone calls me Rob. But either or is fine by me. But as Flamur mentioned, I've been with Citizens Bank. I've known Flamur for about a year and a half now. I've been with Citizens Business Banking for just shy of 3 years. It's felt like longer, especially over the past 6 to 9 months. We were embedded with PPP and portions of the CARES Act still are. So I say just shy of 3 years, but like I said, it felt like north of 3 years. I think this 6 months count as a full year. But in addition to that, I was with a previous bank of PNC Bank in their commercial lending and their business banking group for 5 years. So all in, like I said, about 7.5 to 8 years of business banking. From the South Jersey area, I grew up here, went to Shawnee High School. From the Medford area, grew up, as I mentioned. Went to the University of Alabama for 4 years, got undergrad there, stayed there for grad school. So in total from 6 to 12, moved to Atlanta for a little bit, started with PNC, helped their build out of their market and their footprint as they expanded, took over the World Bank of Canada's footprint down in the Southeast. So helped with their business banking growth there and their expansion there. Met my wife down there. She's from the South, small town just outside of Columbus, which is Fort Benning, Georgia. I was able to talk her in, as I mentioned to Noel this morning or previously. I talked her into higher taxes and congestion and not as good weather. But no, we're happily settled back in actually in Medford Lakes, in the Medford area, where we grew up or where I grew up. And I transferred at that time with PNC. That was in 17. And then shortly thereafter changed over to Citizens as there was an opportunity that came. I was in Philadelphia at the time. There was an opportunity here in South Jersey, which I took. So, without much further ado, right, I think 2020 has really, it has its pros and cons, right? Obviously, I think everyone's getting bit by something here in 2020. It's been a really tough year. I feel like I'm getting bit by right now because my internet's down. So I was with Flamur again this morning, and I was able to call in via phone. And as I was preparing a few items for our call to be able to present, the internet coupled with some of our internal items that we had to get cleared to be able to provide to you all to as handouts to be able to view. There's been delay there. So I apologize. I'm going to try to make it as interactive as possible without having a presentation per se, but rest assured that I will get a presentation and a deck that I am going off of and will be going off of out to Noel and Flamur for y'all's review and like I said, just review. So as I mentioned, with 2020 leading up to 2019, 2020, commercial lending was it was on fire, right? People were looking to refi at the time. Rates were low. We were seeing commercial lending rates in the 4 to 5% space. Maybe a little higher, but for commercial real estate deals, that was really where we were seeing a lot of the action there. When COVID hit, to be honest, I'll just share some information. I can speak strictly, obviously, for Citizens, but I think it's pretty market wide or industry wide from a lending perspective. Banks kind of put a hold on everything. They started focusing strictly on PPP. I mean, we took at Citizens about 52,000 applications or fundings for PPP. With actually, I'm going to pat myself on the back. I'm a very transparent person, very straightforward person. So, I'll fall on the company's sword when I have to, and those types of things. But I'll also, tell you how it is competitive wise as well. But one thing I'll say with Citizens, I think our average PPP funding was I think fantastic. I think it was somewhere in the range of about 175,000, which is a testament because we're small business, right? We love small business. That's what we do. It's what we do well. My parents, my family owns my in-laws and my direct family own small businesses, so that's near and dear to my heart. So to be able to see that our fundings aligned with small business was great. Of course, maybe larger companies, yeah, they do need it. But 70% of the lifeblood of the economy is small business. It's a tip of the cap that we were able to help small businesses in that time. So that probably took preparations beginning to March into April, May, June. And we finally started coming out of our shells in July into August as a lot of those funds got dispersed. And when we did come out of our shells, we were met with a whole new environment, right? We never stopped lending. Everything slowed down because we were reviewing all the PPP loans, but we never stopped lending. But when we did come out of our shells, our lending appetite, at least for Citizens, and again, as being one of the larger mid-level, mid-market banks, and still having connections and relationships with other banks, even the larger ones, the B of A's, the Wellses, the PNCs, while I can't speak for them, I definitely know through here and through the grapevine, and you all may have experienced this as well with certain transactions, that lending appetites have definitely changed. People are lending, but those underwriting scores and matrices have definitely changed. So, as I mentioned, when we came out of everything, one of the things, for example, we look at debt service coverage. We'll get into that a little bit more. Went from 1.25 or 1.2, 1.25, all the way up to 1.5. Lines of credit. I know that's not necessarily, it's not one of the topics of this call, but for example, lines of credits we're doing, but, we're doing it again. I say sparingly, but, it's more difficult to get done. So it's definitely a new world, but again, with those worlds, the new options come opportunities. And with those opportunities, we're seeing rates industry-wide fall, right? So just 6-9 months ago, as I mentioned, we're seeing rates in the 4 or 5s. I can speak for Citizens. We're seeing rates in the 2s and 3s, right? And while I've been in business banking for 7 years or 8 years, I'm talking to leadership and talking to other business partners who've been in banking for 25 years. And we don't have to take a poll here, but I'm sure we have some folks on this call who've been in commercial real estate or have experience in commercial real estate for longer than 10 plus years, and rates in 2 and 3%. It's you'll fall over, right? It's just an incredible time to borrow, just so long as you can borrow. There's times when you have money, it's one times when you make money. So one of the things that we're doing here at the bank is we are doing our best to take any and all application, field and review any and all application, but we also know that, it's not as easy as it once was. I'll take a pause there for a minute. So what we do at Citizens Bank, we have our commercial lending department, I'm going to say, has kind of 2 different avenues. I'm going to go over each one of those, but I'm going to go over the first avenue, which I think is more geared to this conversation in this call, but I don't want to miss on that second piece. So again, I'll go over the first one, take some time there, and then we'll go over the second one. And please, if you guys have any questions along the way, stop me. I think we have a kind of a smaller, intimate group. So if you guys do have any questions, again, don't hesitate to stop me. Maybe raise a hand on the interactive screen, and for more, Noel can stop me. But so our commercial lending group, for loans traditionally that are over $100,000, we're doing a more conventional underwriting application process. What does that mean? We're getting 3 years of tax returns, business, personal. Anyone with ownership in the company, we're asking for your personal. We're asking for 3 years of profit and loss and balance sheets. We're asking for a personal financial statement. We're asking for a schedule of business debt or business debt schedule. You guys are all probably familiar with those items that we're going to need. We also have 1 or 2 items that's more of internal pieces. We ask them some questions and get some updates as to where the business is from a COVID and pandemic standpoint, right? Because that's a legitimate question. We don't know what's happened during that business. We don't know what's going to happen in the next 6 weeks, let alone 6 months, let alone 6 weeks. So we really want to get a handle on the business and that business model and how they fared over the past 6 months. So we collect all that information up front. We submit it through our underwriting team, and of course, we go to a decision. Well, what is the appetite for the bank right now from a commercial standpoint? So we were really liking to see, we do really well in the manufacturing space, we do really well in the wholesale space, the professional service space, and we do well in the healthcare space. We have our own healthcare group. We do really well there. But we also do commercial real estate. And with the commercial real estate piece, we it has for it to fit in our business banking wheelhouse or our swim lane. It has to be 4 or more units or 4 or more family unit to fit with us. Anything south of 4 goes to our consumer or our traditional mortgage loan officer that you all may utilize. Again, you may have contacts with, but 4 or more is our wheelhouse. Really what we see and what we do well in is what I call your garden style apartments. You all are familiar with the area. So, if you go up and down maybe White Horse Pike or any sort of, major thoroughfare, and you see, apartments on the side that are, 2-story, have a wing here and a wing there, anywhere from 10 to 20, 10 to 30 folks. We do really, really well in that space. And we've had experience there both pre and post COVID where that does well. Anybody have any questions so far? Any hands raised, Noel or Flamur?
No questions on the chat, Rob, but before we get ahead of ourselves, can you highlight some of the key differences between what a typical residential unit, say like a 4 under units, versus what your department will ask for when it comes to kind of funding and some of the ratios you look at in tax returns? I'm assuming you want the business tax returns. You don't want my personal information when you're funding some of these deals, correct?
Sure. So what we'll do, again, when it comes to, 4 is our watermark, is our high watermark, right? North or south of 4 is where, we're really at. And if we're south of 4, excuse me, I have, a couple mortgage loan officers actually from where I could definitely get you involved if, for a follow-up call. I'd love to get Ryan involved, but, from a standpoint of 4 or more, what we will still look at, just as I mentioned earlier, we're going to need the full gamut of tax returns, both business and personal. We're going to need those guarantors who own that holding company, their tax returns, their personal financial statement, because with any bank business loan, and I say small business, I mean, I had a client of mine ask me one day, hey, I want to borrow some money. And I said, okay, Mr. Customer, but, we're going to need, as a result of this loan, we're going to need a personal guarantee. His personal guarantee, I'm a business owner. It's not my personal, it's my business. Well, Mr. Customer, I understand that, but as a small business owner, that is what we need. Well, the owner of Coca-Cola doesn't have to put up a personal guarantee. So, well, that's a little different with all due respect. If we're having a conversation, we're having a different conversation if you own, the likes of Coca-Cola. But when it comes to sizes like we're talking about, maybe a 10 family unit, or like I said, all the way down to a 5, we're going to require the full gamut of personal and business tax returns. So what we do when we look at a deal, we look at an opportunity in those tax returns, excuse me, we're going to take a look. The pretty number, right, is what the business did gross, what their gross number is. Hey, we're a $5 million company. We're a $2 million company. We're a $15 million company. That's the pretty number, right? We like to hear that number, makes us feel good inside, just as we all would with our own businesses, right? That's a great accomplishment. However, when it comes to underwriting an opportunity such as this, we actually completely bypass that number. Our first number we look at when we look at any loan opportunity in this space, in the commercial real estate space, in the multifamily unit space, is that net income number. That net income number on the M1 is what we look at. And from there, there are a series of add backs and potential takeaways located within, on and or in that tax return that we will look at. So our add backs in, right? Our first few things, we take that net income number, we'll add back in any interest expense that is incurred on the first page of the tax return. We add that number back in. That helps our global cash flow. We add in any depreciation that may occur as a tax standpoint. We add in any amortization, plus or minus book depreciation amounts as well. That can also be added and it can also be taken away. Any Section 179 expense, we add back in. So, we could have an opportunity that says, well, they only net out, $100,000, But if we can add other more items back in, I use 100,000 just as a round number. We add those other items back in, it all but sweetens the underwriting scope. What we also would do is if there's any rental expense. So if for any reason, if it's an owner-occupied situation, or if the individual currently rents their office space, or if they're in the real estate space and they're currently leasing their office and they want to buy elsewhere, if they're paying, if their rent, for argument's sake, is $1,000 a month, we'll add back in $12,000 for your annual rent. So we can add that number back in because at the end of the day, you're no longer going to be renting. So that $1,000 a month is actually going to be turning into a mortgage payment that will hopefully be less than $1,000 a month, right? So those are all pros of things that we can add back in to help sweeten the deal. Now, what would hurt the deal? Flip side, right, would be, quite frankly, the new loan amount. So we would take the new loan amount and we would take that number, and ultimately we would divide these numbers by 12 to create a monthly expense. But we would take, let's say it's a $300,000 loan, or even more than that, a $400,000 or $500,000 loan, and we take that number back out because that money is then leaving the business. As a result, if there's any existing debts on the business, we put those numbers in because that's coming out. If the individual, if that LLC or holding company owns other property, and there's a note on those properties, right, we have to add that in because, again, those are debts that the company has to pay, and those monies come out of that net income number. If it's existing, it doesn't necessarily come out of it, but it has to be added into it because, again, that new debt will ultimately come out of that net income number. So we take all of that information first from the business, and then we will go to take the personal tax return, again, because it's a small business. We know that the small business owner, it's their lifeblood. It's their, like I say, only source of income, but it's a pretty large amount of their income. And we take a look at their tax returns. We do somewhat of a similar thing to their personal tax returns. We take out any mortgage that they have personally, any installment loans, a vehicle note, any type of note that they may have. We take out any revolving lines of credit. When we do a little asterisk, when we do a revolving line of credit, we always assume that it's maxed out to its fullest. So if you have a $100,000 HELOC or $100,000 business line of credit, we assume that it's fully drawn. Even if it's at zero, that's just the nature of the game. And we take that number and we combine the two of them, what we call, to create a global debt service coverage, DSC, or GDSC, or debt service coverage. And that is similar to a DTI, your debt to income, but it's taking, again, globally, and can the income service the oncoming debt? And you may recall when I first started, I alluded to when COVID happened, we kind of tightened the belt straps a little bit and went from a 1.2 times to 1.5 times. You guys that may sound familiar to you all when working with existing bankers and existing banks, but in case it doesn't, what that means is that for every dollar going out, think of it, we need a dollar pre-COVID, $1.20, $1.25, now $1.50 coming in. So that's kind of the gold standard of our underwriting. We can get into more weeds, but from a holistic 36,000 feet view, that is pretty much the gold standard. We are a cash flow, and most of your conventional banks and probably most of your smaller, regional banks are going to be cash flow based lenders first. Does that pose problems for some folks? Yeah, I'm not going to sugarcoat it. Yeah, it probably does, right? Because especially in the investor space, they're relying on those rents. And the more you get to build out and the more you get to secure from a property standpoint, right, your portfolio grows. And sure, you get to pay it down. 100% understand that. I have clients of mine who do it. And quite frankly, I personally have a rental home that we have, my wife and I. So I definitely get the game and the benefits of it. However, that does pose some challenges because not everyone can cover, 1.2, let alone 1.5 that we're sitting at here at post, if you can call it post-COVID and whatever stage we're in of the pandemic. So, Flamur, does that kind of answer that question, and does that kind of address that piece of what you alluded to?
Yeah, definitely. So just so we could kind of break the numbers down a little bit, so everybody kind of gets the picture, because there's definitely a lot we threw out. So if just we take that $100,000 example and say they cash flow, we'll just assume $1,000 a month. You would want to see, or say the loan amount is $1,000 a month. We'll just use that as an easy math number. You want to see at least $1,250 prior to COVID. Now it's up to $1,500 a month in free cash flow for the business for them to be approved for that.
At a very, very, napkin math, taking a quick look at tax returns, that's spot on, correct.
Okay. Just for my fellow realtors on the call, it's very similar to what you'll see mortgage people do on a debt to income ratio, as Rob alluded to, is just we're looking at the business, but unless you're the next Coca-Cola or McDonald's, they're going to look at your personal information as well. So they might be a great business owner, but if they can't control their finances on the personal front, for a lot of business owners, even the ones that do extremely well and several $1 million of revenue, probably several $100K or higher into their pockets at the end of the year from their business. And that's probably most of the business owner around here. They're going to still look and have to sign a personal guarantee, which means they're personally liable for the loan. They can't say, oh, the business is, goes under, they can't come after my personal assets like my home or my cars or personal savings account, but they can. So that's the key to remember. Usually the business owner is the business for the most part on the small business.
And to piggyback on that, Flamur, I don't mean to cut you off, but
No.
People, again, as I mentioned, you'll come across folks and clients and prospects who'll say, well, again, I don't want to be a personal guarantor, and I've never been a personal guarantor before. I've done this, that, and the other, and have been there. And yeah, they very well may be correct and accurate with that assumption or that statement, but at the same time, look, if you have a business credit card, even if the limit's $5,000, $10,000, whatever the number may be, you're personally guaranteeing that debt. On a disclosures that you sign or go online and sign up for a Capital One card, American Express, Citizens Bank, whatever credit card you go after, somewhere down on page 21, I'm just making that number up, but somewhere down in that fine print, line 21, wherever in the middle, it's going to say you're personally guaranteeing the debt. So whether you think it or not, 9 times out of 10, 4 out of 5 times, that client is personally guaranteeing that debt.
Yeah, and the same works on the lease front. I do a lot of commercial leases, so I only have one. He's my largest client that doesn't sign a personal guarantee. But just to give you guys a sense of the numbers, I mean, 2 weeks ago they raised $380 million at a $3.9 billion valuation. So that's the kind of clients who typically don't sign personal guarantees, but they'll sign a full corporate guarantee, so the corporation itself is still liable because it has enough assets and cash on hand to secure that lease or that loan. And even then, I'll have landlords push back and try to get a personal guarantee because they don't like the financials, or it's too new of a company or what have you, or just some landlords are old school. They don't sign any lease without a personal guarantee. So keep that in mind. Sometimes the landlords could be more picky about the financials than a bank can be to a degree.
And I honestly really hate to keep harping on this, but and don't want to use it as an excuse. Please don't take it in any way of that sense. But we really are in uncharted waters. I mean, it's great business, right? For real estate. Again, rates are low. It's a seller's market, which kind of maybe offset, which is kind of why people can raise those prices because they know borrowing is banks are giving away money theoretically from a rate standpoint. But it is challenging times to underwrite and to review things. So as a result, if not more than ever, banks are requiring additional steps, such as, they're definitely not going to balk at, personal guarantees and those types of things. And some of these numbers, as I mentioned, and we'll mention in a few other points I'm going to make, there ain't budging. So it's frustrating. Trust me, I know. But we've had some opportunities that came across recently that 9 months ago would have gotten done snap of a finger. But we're not living 9 months ago. So.
And just to go back, you mentioned the 4 units. It's typically like your cutoff point. I'm assuming that's all 4 residential units, not if it was a mixed use building or full commercial building.
Correct. So mixed use, from where I had a lot on here actually. When I mentioned to you originally, I said it was probably about 30 minutes. When I started creating more and more information, I actually did have to trim it a little bit, and we'll talk offline after this because I'd love to kind of bring up a few more things, in a couple months or whatnot again with the team here. But again, we'll do on a one-off if I'm invited back.
Yeah,
we'll do a one-off. We'll chat about a few other things.
And
but
just in an effort to make it more interactive, does anybody know where that 4 residential units threshold comes up in our business every day? Feel free to unmute yourselves and chime in. Nobody?
Are you talking about multifamily?
Correct. Why Rob is kind of over 4 units he tends to specialize in. Anyone at all? Where the 4 unit limit comes into play in our business? Even if you're in residential, can you write a contract for a 4 unit building?
You can't write
An
4
attorney
units,
has to do
you
it?
can't write 5.
Sorry.
You
How's that
can
say?
write 4 units, but you can't write 5.
Yes, unless there's a commercial unit already there. So even if it's a single unit, you can't write the contract. So it sounds like Citizens Bank is following the same guidelines as the New Jersey Association of Realtors.
So Rob, are you doing a lot of mixed use?
I'm sorry.
A lot of mixed use properties?
So mixed use, that's always it's a tricky subject, right? So to answer your question, yes, we do mixed use properties on the commercial side. There's a however coming, and that however is that it has to be over a certain percentage commercial, right? So right now, or previously to COVID, that was 65% mixed use. However, that has since changed. So what I'll actually, if it's okay, what I'll segue that into is, again, the bank has held off on doing certain things, again, post-COVID. As I mentioned, the industry's kind of had a freeze. So to be honest, right now at this point in time, on October 29th, I have have not seen any mixed use get done since, let's just say, April 1st. Doesn't mean, again, that's the right deal. And one of the things I mentioned to Flamur was, every deal is different. Every transaction is different. So that doesn't mean it can't get done. I just haven't seen it get done because, again, you have to carry a certain percentage of commercial property. We'd like to see, and this is maybe a segue to get into owner-occupied real estate, because I want to spend about 2 or 3 to 5 minutes on owner-occupied real estate. What we like to see is those leases that maybe, again, rented out in a mixed-use space, if it is rental, to be the length of the term of the loan, right? So we do 5-year loans on a myriad of amortizations, 5.5, 5.10, 5.15, 5.20, 5.25. And for those who may not be familiar with that, reasoning is it's a 5-year loan that will be coming due, and not coming due, but will come up in 5 years. At that point in time, the loan will be, could be refinanced. It'll have to come up for review all over again. That's a time when a lot of banks are hopping on, clients to try to, win their business over and refinance debt. But it's a 5-year based off of a 25-year, mortgage. So you're not paying a 5-year loan, right? You'd be crushed buying a $750,000 property over 5 years, right? You do it over 25 years, but your 25-year payment, but you're doing it after 5 years. So why is that important? Well, A, it's important because it's the structure of the loan. But two, it's important because as an underwriter, what they like to see are longer term leases. So mixed use, definitely can go more into mixed use. If it's okay, I'll segue into a little bit more of owner occupied. They have a lot of the same style, segments to when those type of opportunities are underwritten. A lot of similarities. So what we will see is we want to see those leases be the same term. So for example, a good owner occupied for us or a good owner occupied for most of your banks would be a good anchor in that owner occupied space. So you go to a strip center. Again, I'm not sure how familiar you are with the area. We have certain areas, but let's say Sicklerville and Berlin Cross Keys Road, leading up to the Atlantic City Expressway there. There's a myriad, there's a host of, different strip centers and strip malls. And, a good one to the bank will see is, hey, look, there's a strip center here. There's a Subway, or let's not say Subway. There's a Primo's, right? A good Primo hoagie spot. There's a Primo's, there's a dry cleaner, there's a smoothie place, for example, and the anchor of that is a dental office, or the anchor of that is a doctor's office, or the anchor of that is a law firm. And you have that dentist or you have that professional say, well, I want to buy this. I've been renting. It's a pain in the neck. I could probably pay the mortgage just in that rent alone and then, collect rent. So that number has always been, again, you need to occupy approximately 65% of that space, maybe 60%. And you need to also be able to cash flow the note yourself on your own. Those are kind of two little standards that the bank needs for owner occupied, and most transfer over to that mixed use space. We want you to be able to cover the note yourself because and have those leases be at least 3 years, preferably the length of the note, which is 5. Why? Well, we know that you're a solid business and you can cover that note yourself. You've shown history of that. And two, and as a result, if someone leaves, sure, you got lease agreements and we will need those in underwriting, but things happen. We all know that, right? Things happen. Businesses go under, and you know what? The lease won't hold up anyway. Business goes bankrupt. Business closed down. I mean, gosh knows we're seeing that. One of 25% of the businesses could potentially shut down as a result of COVID. So how many strip centers then are losing, 1 out of 4 businesses, or 2 out of 8 businesses, right? So there's that concern that we want that business to be able to cash flow pretty much on its own from an owner-occupied real estate, OCRE, for multi-use, multi-property. I didn't really answer maybe a specific mixed-use building question, but again, a lot of those similarities from owner-occupied and mixed-use apply. If you're south of that 65% number from a residential standpoint, then again, we'll get our consumer team involved, our MLOs involved to have that conversation.
Let me ask you this.
Does that answer that question or provide a little more light to it?
It does, but let me ask you this. So in our areas, especially Atlantic City, which a lot of us do a lot of business in, there's tons of 5-unit properties that are really tough to finance that we've seen. Is that something, do you guys have a minimum loan amount or anything like that?
So I did hear, I apologize, it sounded a little echoey, but we're in Atlantic City. A lot of, let's say, 5-unit style, and I'm assuming maybe strip center style or style businesses. No?
5-unit multifamily.
5-unit multifamily. Okay. So now your question?
So 5-unit multifamily, Atlantic City, do you have a minimum loan amount?
Do we have a minimum loan amount? We do not.
But you can do this 5-unit mixed use, this 5-unit residential apartment buildings.
Correct. That would be in the business bank's space to look at, to apply through, and as previously mentioned, that would be one that we would do with the underwriting that I described earlier. So the answer to your question, yes, that is something we could do with no minimum loan amount.
Thank you.
Sure. So there's one last piece that I want to kind of go over, Flamur, if that's okay.
Sure.
And then I'll open the floor to any additional questions about anything we went over. I want to be respectful of everyone's time so we can, get back to our lives of looking at the rain and worrying about flooding and everything like that. Is a series of loans that Citizens Bank rolled out when I first started with the bank about 2.5, like I said, years ago. It started a little bit before me. It started about 3 years ago. It was really up and running around January of what year was it? 3 years ago. So around 17-ish, if I have my years right. And it's a name that the name doesn't mean anything, it's called Vantage Link. So if I reference that, you know what this is. And it's different from our conventional underwriting product. This is that other portion that I was talking about, that it could be a good tool for investors and individuals who are in the real estate game who may not be able to qualify. I don't want to say qualify because that's a tricky word, but may not be able to, use the conventional financing tactics that we previously addressed. So what Vantage Link, it started with Citizens. It's going more it's geared towards that no doc online style lending program that we're seeing a lot, quite frankly, online. When I was with PNC Bank, and again, I'm not throwing shade on any bank because PNC was a fantastic bank. It still is. And I have a lot of friends over there. But again, Citizens was the right fit for me at the right time. But at the time, PNC did not have this loan opportunity. I don't think they still do. Which again leads me to say that Citizens Bank, when they say we're cutting edge, firsthand experience, I can say Citizens Bank is pretty cutting edge when it comes to this type of product. So what Vantage does is what used to be pre-COVID was $150,000 threshold. That's been trimmed down to $100,000. Still a decent amount, $100,000. And what it is it's a loan product where you have to be in business, where traditionally underwriting, you need to be in business from 2 to 3 years, preferably 3. With Vantage, you only need to be in business for 1. Now, again, that's most industries, 80% of them 1 year. Retail has to be in business for 5 years. Construction, you have to be in business for 5 years. But for 80% of your businesses out there, you have to be in business for 1 year. You go through the application process. What does that entail? It's an online app that I fill out with the customer, 5 to 10 minute application. I'm going to ask you your basic demographic questions. I say demographic might not be the right word, but your name, your date of birth, your social, your address, your email, very simple questions, right? What is your household income? What is your total combined household income? What is your household investable asset, your IRA, your 401k? What are these approximate numbers? Within 10% of that number, so it doesn't have to be to the penny, doesn't even have to be the dollar. $100,000 my household income. Well, if it's 50,000, all right, we got a problem. But if it's 105 or 98, 100,000, we're good to go. Then I go into the business. What's the name of the business? Tax ID, address. How many years in business? Say I was formed in February of 2014. All right. What's your gross income? We'll use the example. Let's say it's $100,000. Okay. What's your net income before taxes? Okay, let's say that's 50,000. Let's just let's just say it's 50,000. I said how many years in business? How many employees you got? How many customers do you got? What's your industry, as I mentioned? And what's the loan amount? We can go up to 100,000. What are the proceeds going to be used for? Business expansion, capital improvement, whichever. And then I write up a little narrative. Hey, this business is going to use this to build their business, to secure more supplies or material to help them grow and to increase their customer base. And we submit it. Of course, with any application, we pull your credit. Traditional loan underwriting, our decisions take, right now, we're trying to say if you want to close by the end of the year, we got to get your application in now, just to be honest with you. So it's about, a 2-month turnaround time. With these loans, these sub 100,000-ish, we can see a decision back traditionally in 72 business hours. It's an online close where, again, it's a DocuSign. It sends you the email. You look at the terms. Hey, I agree. I check a box. You get the closing docs via email. You DocuSign. You get the loan. You get the loan dispersed into preferably your Citizens Bank checking account because it's a lot easier to transact. You get it next day. If you wish to maintain your existing account, which is okay, it could take up to about 2 or 3 days for those funds to get dispersed. Again, we're not talking, months here or weeks even. We're talking days. So why is this important, and what are the terms of this style loan? It's unsecured. So we will, let me say this, not unsecured. It is non-collateralized. We're not putting up the individual's home, the individual's business, brick and mortar, their accounts receivable, their equipment. Those items aren't being held as hard collateral. With this loan, we're using a general blanket all business asset lien on the business. We're still having a personal guarantee. Can't escape that, right? We're always dealing with that. But the benefit is, right, it's a cash loan. So if you get $100,000 approved for term debt, you wake up that next morning, pending approval, you're getting $100,000 cash deposited into your checking account, right? The terms, since it is kind of uncollateralized, there's no hard firm asset, rates a little higher. We previously got one done in the mid 5s. So we can say 6s to be, kind of cautious.
We're good. We're right.
We can say 6s to be kind of cautious and kind of that space, right? So it's a little bit higher. But what is this let me go back. It's up to 5 years. We only go out 5 years, 60 months, just like a car note. So it's a little bit of a steeper payment. But what does this benefit from, right? You're talking at least 1 year in business. We're talking it's straight cash, So again, those proceeds obviously need to go to business purposes only, but it can be used for, if an attorney wishes to need help with a down payment for something they're trying to do and purchase a property. If they have if they're able to secure private financing because they've only been in business for a year and they have a deal they can't refuse and may not be able to go conventional, as I mentioned previously, use $100,000 to help with that. And because he or she may know that my rental is going to pay that back pretty darn easily and cover the note, hey, let's just knock this out in 5 years. And all of a sudden, you own the property, you have the liquidity in the property, and you're going to pay this off in 5 years, and you're free and clear of it, right? So it's a great way to maybe complement other privately held notes, or if you can pay it yourself, it's a great way to help bridge a gap of maybe a lack of cash to help finalize a deal. I lost my train of thought for a second, but no, like I said, so it's a great tool to be able to use for some of those quick down and dirty type transactions that may not be able to be done conventionally. And it's a heck of a lot better, I think we all know, than going to, I'm not going to, hey, everything happens, but like a title type max or one of those type financial institutions where they're dinging you for 20% interest. Or just as I talked to a client yesterday who's an electrician, been in business for 7 years, it's better than, going to a factoring company that is going to get you 30% interest and hold on to your receivables. They take the money first before giving it to you as the client to be able to secure $50,000 to be able to pay off some existing credit card debt or whatever the case may be, right? Rather pay, if you have $40,000 in debt to help you cover during COVID, it's a heck of a lot better to refi, it's a hell of a lot better to pay 5, 6, 7% interest than to either continue to pay your 20% credit card and or a factoring company at 15% and they get your receivables before you do. So that was a quick, brief discussion or piece on this Vantage process, which is a great way to supplement. That's, I'm going to say it's kind of stopping short, but that's kind of all I have on that piece. Flamur, Noel, I guess we can open the floor to discussion, conversation, either about Vantage or anything in general.
Great. Thank you, Rob. Just so you guys are aware, in commercial, there tends to be two type of buyers, essentially. I mean, there's a whole slew of different buyers, but they usually fall in one of two categories. It's either going to be an investor, which you've probably encountered, and they'll typically specialize in certain product types or certain areas, but at the end of the day, they're just looking at the income. And then there's the actual business owner, the owner operator, who's going to take over the property to conduct their own business. And they may have additional tenants as Rob alluded to, that dentist office who's buying out the strip center with the Primo Togies. But ideally, they're looking for a space that's going to operate their business. And so I get calls or texts or Facebook messages from people asking me for a commercial lender without any kind of background information. So you really need to know what your commercial client is buying, why they're buying it, what type of property, because then you have to use the lender, maybe more than one, to really solve the problem on how to get that property for them. It's not as easy as just calling one go-to commercial lender. Sometimes you might need a Vantage loan that Rob alluded to shore up their finances to get a down payment, or what have you. So it's really looking at the business owner relationship as your client, and you're being a counselor of sorts, an advisor to help them kind of achieve their goals. So, but yeah, who has any questions or specifics? Rob?
And I can't express that enough, Flamur, is to be that trusted advisor, right? Well, I think I'll be very honest with you, when I first got into banking 7, 6, 7, 8, 9 years ago, I was thinking, oh, banker, loan. It's awesome, right? Let's get people money. Let's get their businesses grow. Let's help them, bridge those gaps. Quickly did I learn and quickly did I pick up that, yes, that's your goal, right? Your goal is to help these business owners bridge those gaps. It's to help fund expansion. Hey, let's get you to a bigger building so you can increase your revenue and bring in more inventory. Let's get you a line of credit so you don't have to pull into your own capital. Let's use a line of credit to bridge that gap, because you're only going to need 2 months until 2 weeks, 2 months to be able to get those supplies in. Quickly became that advisor, that trusted advisor, to be able to say, look, Mr. and Mrs. Business Owner, I know you want to purchase this building, but unfortunately your tax returns are showing X and we need them to be Y. So go back to your accountant and say, look, this is what we need. Like, this is what the bank wants to see. Hey, we need to see, 1.5 times cash flow. We need to see X, we need to see Y. And a good accountant, right? They're a good accountant is to help eliminate that tax burden on that business. But sometimes to make money, you need to have money, and vice versa. So to be able to go back and say, hey, look, Mr. and Mrs. Business Owner, if you want to do this, we can do it. I think next year is going to be a better year for you. Here's some of the things we need to see. So they can go back to their accountant, they can go back to their individual and say, this is what I need to see. Or conversely, hey, this is what I got. This is my tax returns look like. Rob, how do I look? And I say, well, look, Mr. and Mrs. Business Owner, I think with what you're showing, you can purchase a $500,000 building, or you could purchase a $4 or $1 million building. So that gives me the ability to go back to you all, or the client to go back to you all and say, hey, I want a $1 million building. Well, that's great. And you all as realtors are going to love that, to be able to get them in one. But to be able to be that trusted advisor and relationship manager, be able to say, hey, look, Mr. and Mrs. Business Owner, hey, Rob, how does he qualify? Does she qualify? Look, we could definitely do a $650,000 building, maybe pushing it. So that narrows y'all's search, right, to be more responsible and have a better experience than saying, let's go for $1 million, up, the bank won't do it. Let's do 7, the bank won't do it. And we settle at 5, and it took a year to close versus a couple months. Sorry, I didn't mean to interrupt there for more.
No, absolutely not. You were fine. Who has any questions for Rob, or any one of us, actually? Doesn't have to be about lending. It could just be about what we discussed today, or commercial real estate.
Any questions about the PPP for your clients? Have questions about Paycheck Protection Program, about where the market's looking, what underwriting is looking like, just general banking questions about how the bank's looking years, 6 months ahead, anything, please. I would love to get some questions and have some dialogue. I know we're butting up against noon, but I don't have a call until 1 o'clock, so I have some time if we want to go over. Please don't hesitate.
Any word that the bank's heard of that the Treasury might extend the PPP program for like a third phase? I know they were talking about it in Congress, but nothing ever got passed.
Well, they were talking about it in Congress, but nothing ever got passed, to be honest with you. All kidding aside, and that's kind of how my dialogue is with my clients. And, I hope, again, I'm very easygoing. I like to joke, like to have a good time, but of course be serious when we need to, right? So, what I'm telling my folks is this. Right now, leading up PPP, everyone got funded for the most part. initially 6 weeks ago, there was chatter in DC. The banks were beating down the door. Business owners were beating down the door of the houses of government to say, look, what's the word on this? We need to start getting this thing forgiven. We're into the 8 weeks and then some 24 weeks, right? We're into this time period. We need to, business owners want to know what's going on. So initial ideas were being floated about 150,000 and below, being a signed document. You check off some boxes. If did you use the funds for the right purposes? Yes, no. Of course, inevitably people will probably say yes, but you answer the questions to the best of your ability. And if you're found to be lying or, using the funds incorrectly, then, action will be taken by the feds on you and the business. That was the initial thought, 150 and south. Well, there was back and forth. Democrats wanted a $3 trillion bill. The Republicans wanted a $3 trillion, bill to help with the stimulus for going forward. Embedded in there somewhere was some additional guidance on PPP forgiveness. No one ever agreed on it, right? Politics, left, right, whatever side you're on. The other side doesn't agree, whichever. It's just the way it is. So they didn't agree to it. Fast forward 6 weeks to the past week or so, guidance has come out that instead of it being 150, it's looking more and more like 50,000. Anyone who got PPP funding for 50 and below would be given, provided with a document. Have I seen the document? Has the bank seen the document? No. But they'll be provided with that same document that I alluded to. Hey, have you used these funds correctly? Blah, 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 blah. Yes, no. Sign it. If you, are lying or not telling the truth, action will be taken and being submitted. I know Citizens is starting to roll it out to our folks who got 50 and below starting this week. So that is in process. As far as any follow-up or additional stimulus money, a second PPP or a follow-up portion of the CARES Act, I honestly don't know. I woke up yesterday to news alerts, I think, saying the Senate has taken a recess until after the election. So nothing's going to get voted on. And quite frankly, what we were hearing with our ears to the ground was that nothing would really happen, or was expected that nothing would happen until after the election anyway. Again, call that just not agreeing, call that politics being politics. That's up, however, wherever you all stand and feel. That's just, I think that was it. No one wanted to do one way or the other before the election happened. It's unfortunate, but I think that's just the way it is. And it's looking more and more like that. So for more to answer your question, and I guess what I was kind of, kidding up being sarcastic, is quite frankly, we haven't heard anything. We don't know of anything definitive. And I tell my clients this firsthand. You'll find out at the same time we, as banks, find out just by watching the news, right? You get a breaking news alert that says the House of Government agreed to XYZ bill. You'll be able to read and say, okay, well, there's more funding coming out or not, right? So I always tell my folks, we'll be the first to tell you when we get definitive updates. But any word about anything, the best bet would be, your news channel of choice. Your CNBC, your Fox, your CNN, your local news, whichever you prefer to use. That would probably be your best bet to determine what's on the horizon there.
Right, thanks for that. I know the EDA, the Economic Development Authority, has launched a third round of their stimulus plan type of grant program. So you guys look at the NJEDA website. I don't think the SBA economic loan program has relaunched. I think they're pretty tapped out there, if I'm not mistaken. But
I'm hearing the same thing from you. I'm hearing the same thing.
So, it's about keeping in tune with what's going on, guys, and helping your clients, because the business owners are people too at the end of the day. So they need help with their residential property. So if you're able to help them out, just guide them to the resources. You don't have to be an expert in every type of loan program or commercial real estate. You have myself, Noel, Shantae here, Bobby. We're doing commercial pretty regularly. If it's not a majority of business, we do it often enough where we consider commercial agents. And then you have a lean on resources outside the office, like Rob at Citizens, like your local attorney, your local accountant, who may understand these matters much better, who may be specializing in it especially. So it's key to network and have as many contacts as possible, because when that specific client with their specific need comes up, you need to be able to not have to know it on the spot, but have the resource to reach out to and the contact to guide them to.
You couldn't have said any better. And team, I could probably talk for, like I said, a few more minutes, and I don't want to hijack it, and I'll yield the floor. But that's one thing I would recommend doing. Whether you're experienced, new into the industry, be that trusted advisor. Can't stress that enough. You do the work. Sign up for newsletters. Again, wherever you feel is best and whatever you feel is the most appropriate, whether that be a local news company, whether that be a financial news company, a Bloomberg, a CNBC. There's a company out there called McKinsey that does articles and briefs on business. Hey, what's the next outlook look like for COVID and business impacts? Subscribe to those. Read an article a day, and then maybe once a week or once every 2 weeks, send out an email blast. Hey, this is what the real estate market's looking like due to COVID. And you guys may already do this, and that's awesome. And I applaud you for that. But if not, take a look at market insights and just, have a little email blast once every 2 weeks and send it out to your investors and say, look, I just saw this, that, hey, there's a lot of hot goings on. And they'll appreciate that, and it'll keep you front of mind with them so that, hey, I haven't thought about, John Doe in a while. Let me send him an email, just check in. Hey, I just saw this. This is an economic development happening in Glassboro as a result of the university or whatever the case may be. Or Stockton's doing a new project. So, maybe there's opportunity there. So just those types of things, trip on them, and it'll keep you front of mind.
Awesome. And what's the best way to get a hold of you, Rob, if somebody had a commercial deal they want to run past you or just some advice?
Yeah, so I'll definitely send my email signature. Flamur already has it, so does Noel.
Yep.
But
I just
you guys
updated
could
the
send
chat.
that out, and yeah,
Wait.
I'd love if you all could send that out to the group here. Send that information out. But just so right off the top of your head, guys, again, it's Rob Smith. My number is 609 760 6754. Again, that's 609 760 6754. Text, phone call. You'll all see my email address coming in. Again, it'll be Martin, just like I said earlier, Martin.Smith, Smith. So Martin.Smith at citizensbank.com, CITIZENS bank, just like the stadium, obviously, .com. Give me a call, shoot me an email, shoot me a text. Of course, I mentioned I'm on the phone, so I don't have everyone's name here. I'm sure Flamur will be able to get me a roster who all will join the call, because I'd love to introduce myself to each of you all. But shoot me a text, give me a call, introduce yourself. Hey, this is Flamur, was on the call. Hey, I got something for you, or hey, I got a question about PPP. Like I said, I just want to be able to be helpful for you guys. And like I said, I'm going to go back to this, and this will be my closing piece, is that my parents own a small business. My in-laws own a small business down in Georgia. Like I said, they're in the catering space, so they've taken it on the chin as a result of everything going on. So I love small business. I grew up, helping my parents with their small business kind of thing. So I love small businesses. I love South Jersey. There's a reason why I moved back up here. And I want to see this area really develop and succeed. And I want to see our group, or this age group, again, I'm in my mid 30s. So I want to see we're the next swing of folks who are going to be influential in the area. And I want to be part of that group. And I know Flamur and Noel are just there as well, being influential in the area. And I'm sure you all are too. So anything I can do to help out would be great. Flamur, Noel, I appreciate your time in setting this up. And I'm sure we'll catch up in a little bit. But again, everybody, I want to thank you so much for your time on this afternoon or this morning. And I can't stress enough. It's been a pleasure. And if anything I can do to help out, please don't hesitate. Everyone stay safe out there, stay dry, and go Eagles.
Go Eagles.
Dallas.
Thanks again, Rob. Appreciate your time. If anyone has any other questions they didn't get a chance to ask, feel free to reach out to Noel or myself, and we'll get you Rob's contact info. And oh, wait, Anas has a question. What are the rates for commercial loans and the minimum down payment? Pretty broad question.
Great question. I appreciate that. And that is one piece I didn't. Well, I think I got rates, but we're seeing commercial rates in the twos and threes, which is again unheard of, right? Twos and threes are what we're seeing rates at. Down payment 20% down. We also are a full-fledged SBA lender. We are an SBA approved lender, so we do have SBA options. Again, that's a story for a different day, but to answer any questions, we are SBA lender. Those down payment amounts go down a little bit to about 15 and 10% given the loan structure, but conventional lending, we're at 20% and rates are in the 2s and 3s.
Great. That's
Based off
that's
underwriting and credit.
We're gonna be writing economics textbooks about these rates, probably for our children or grandchildren, but that's another
Refi
discussion.
now.
Yeah, definitely. So if you have any business owners that are renting that are looking to purchase space, this is the time to do it with the any rates being so low. How much mortgage loan for? Nas, can you unmute yourself and specify what you mean?
Hey, I'm sorry. How are you, everyone?
Hey, how are you?
I'm sorry, I have the baby in the background, so I just
okay.
want to get everyone on mute. I was just checking when he said 20% down payment and the 2's rate. Is that for how much mortgage loan? Like, is it above million or below, or is there categories for that?
So yeah, so really good point. That is for, and then again, let me specify this. That's for our conventional lending products, right? Not that Vantage piece. Vantage, there is no down payment, and rates again are in that 5-6 realm-ish. Conventional lending, which would mean we're taking collateral, a hard fixed collateral. We're taking a building, for example, or equipment. We're getting full 3 years of tax returns. We're going the whole 9 yards, full closing costs, et cetera, et cetera. That brings up another point. I'll mention that in a second. But full closing costs, appraisal, blah, blah, blah. No minimum, no maximum for the most part. 20% down. And again, that's where the rates are in the 2s and 3s. So let's say a $1 million property, 20% down, we're going to need $200,000 down. We're doing, we're needing $200,000 down.
Okay, and that's for residential, multi-units only, or also for commercial?
That is for both I say 4 and above. That's for 5 units and above. Let's just argue and say 5 units and above, or traditional commercial lending, owner occupied, 5 and above, or 4 and above, 5, and conventional, buying a warehouse, or buying an office condo, or whatever the case may be.
All right.
Closing costs for conventional, they can range, they can vary anywhere, couple thousand, few thousand. That's obviously every deal is specific and unique. So I can't just say blanket, hey, it's a couple thousand, right? It's in the, couple thousands, which we can build back into the loan. Vantage, it's a one-time 450 bucks. Doesn't matter the amount, 100,000 and less, one-time 450. So that's pretty aggressive. And that comes out of the loan amount. You get a $100,000 loan, you're going to walk out with 99,550 bucks being deposited into your account. Did that answer your question?
Yep. Thank you so much.
Thank you.
Great. Any other questions? Last call. Like that was
And
it.
email me anything else if you got any. So we're all good. Email me any questions. Give me a call if you got any specific ones. I'd love to talk about them.
Definitely. Thank you again, Rob. Thank you everyone for joining us. It's been a great call.